Welcome to you. We saw obviously the Aussie dollar drop to its lowest level in a year. Some huge volatility across currencies today. Do you think that's a sign, I suppose, that currency wars are starting to escalate?
We are starting to see an escalation in terms of the currency wars, and there is a number of things that I'm keeping on the radar in terms of currencies. Over the last couple of sessions, we have seen the numbers coming out in terms of the Swiss balance sheet and its foreign exchange reserves, and it does look like we have seen a massive jump in those Swiss franc reserves, up 50% in the month of August, up by a massive 115 billion Swiss francs. So that's an absolute huge number. And if we have a look at FX reserves, foreign exchange reserves in Switzerland as a percentage of GDP now stands at 70%. That's compared to Japan at 22% and Germany at 7%. Not only that, another thing that we're watching very closely in terms of the US is some debate about to start on foreign exchange, Foreign Exchange Oversight Act. This is where certain duties will be allowed to be imposed if there are countries that are seen as undervaluing their currencies. And there was a Senate vote which was passed to debate this for a week. Of course, China has lashed out at this move. So currency wars is something that we're watching very closely, and we know that the devaluation in the US dollar and the fluctuations that we've seen in currencies has been bad news for a lot of those commodity-based currencies and exporters like the Swiss franc and the Japanese yen. If we have a look at the Australian dollar today, once again, another roller coaster ride. This is what it looks like from 10 a.m. this morning. Now, the interesting thing was that we did see a lot of good data coming through. Building approvals in the month of August up 11.4% month on month, and we also saw a jump in exports in August and the trade surplus at $3.1 billion versus an expectation around $2 billion, and up from $1.8 billion in July. So that was all positive. But of course, if we have a look at the Aussie dollar and how it's reacted, it pulled back, and then there was the interest rate decision at 2:30 where we did see the Aussie dollar fall back. It has now risen to levels before that interest rate decision. So it does look like the currency now looking towards a November rate cut, and we've seen the Aussie dollar really making up those losses after that RBA announcement at 2:30, but an absolute roller coaster ride. The Aussie dollar not looking too bad at this stage.
And Julia, at one point the Aussie actually in tandem with the local market, both heading south. Your take on today's trading?
If we have a look at trading today, it was all about the direction of the Aussie dollar as well as the US futures. And I guess one of the things that impacted quite heavily on the Australian market today were that the US futures did turn positive and they moved upwards towards our session. So if we have a look at the intraday graph of the Australian market, this is what it looks like. And you can see that while the bears were in control at the open, throughout the middle of the day, it wasn't looking too bad. In fact, in small patches, we even saw the Aussie share market moving into positive territory. The US futures did turn positive, and I guess one of the negatives out of the session today was that we were watching this line here. This line here represents the low that we've seen in the downtrend, which started in August, so the short-term downtrend. And unfortunately, as you can see, we've seen a new low in that downtrend. So if we have a look at a 52-week chart, we're seeing a new low in that downtrend that's been there. But altogether, we're looking towards overseas market for more of a lead. And if we have a look at the US market and US technicals at an absolute crucial point, if we have a look at the S&P 500 over the last 52 weeks, this is what it looks like. You can see we're right on the bottom of that trading range at the moment, 1,120 points. So the next couple of sessions going to be very important to see whether we hold that very important support level and bounce back into the trading range, or we make new ground, and that would be a very bearish and negative signal for the market.
And by that, do you think that commodity prices are going to see a bit of I suppose, downward pressure on some of these big deals with Chinese companies? We've got Sundance today, obviously Bannerman as well.
I guess the Sundance news was expected by the market, so that offer's been raised from 50 cents up to 57 cents. But it's interesting to see Sundance Resource shares still trading at a 20% discount to that bid price. So it does look like the market factoring in some sort of negativity. And if we have a look at commodity prices, an absolute tumble in the month of September, especially copper, which was down by 25% and continues to come under pressure. And they say the way the copper goes, the economy goes as well. And I guess it's a reflection of a lot of the investment houses downgrading their forecast in terms of global growth. We saw Goldman Sachs, the latest overnight, slashing its global growth forecast for the year from 4.3% down to 3.6%, saying that they do see a recession in France and Germany emerging, and the chance of a recession in the US increasing from 30% probability up to 40% probability. But of course, Goldman Sachs is a little bit late in slashing its growth forecast. We've already seen Fitch coming out, and it's now slashed its global growth forecast from 3.6% down to 2.6%. So that's really weighing on the commodities side of things, and we have seen copper prices continuing to come under pressure today.